Okay, so today, for the rest of the class, we are going to talk about two things. First thing is what's the structure of annual report 10K and how exactly we use 10K. So today we talk about the technology, we talk about the keyword search, we talk about machine learning, we talk about all this technology. Now let's come down to the most important things we're going to cover today. What's the 10K data looks like? What kind of structure it has? And the most important thing is how we are going to use 10K. How we're going to use 10K. Okay, that's something I want you guys always keep in mind. What we want. So for 10K, I'm going to cover. I give you guys several important sections. There's a white item 1, item 1A, items 7, and other sessions and exhibit. So I want to first tell you why I separate out 1A and item 7. The reason is because excuse me. The reason is because these are some very useful textual sections from the annual report. Why I'm not separating other sessions? Because some other sessions are numerical numbers. Because you know the annual report has textual information and numerical information. For us, we want to focus on the textual information. So the textual information from item 1, item 1A, and item 7, these are the good sessions to look at, and we're talking about example and the application of each sections. For other sessions, you can check on your own. So like I said, some other sessions, they have a lot of numbers there, less textual information. So that's other sessions you can check on your own. For exhibits is very powerful. Exhibits has a huge information. Exhibit has numbers, has textual. It's just a lot of information there. That's something you can dig into too. So for this class, I want to introduce item 1, item 1A, item 7. And for other sessions, you can check on your own. For exhibit, you can check on your own as well. So this is so if it's that's one thing I want you guys to be aware of for the annual report. What do we need? So let's look at the example of this is a annual report. This is Nike, right? Let me see. McDonald. Okay, McDonald. Oh, this is McDonald's annual report. Let's see how the annual report is structured. It started with item 1, which we'll talk about today. We'll talk about what is item 1. We'll give you guys example how to use it. Okay, very important item section. And we talk about item 1A. Item 1A is risk disclosure. So firm has to disclose their risk ex ante, like before things happen, they have to disclose the risk. And item 1B, item 2, we have a legal proceedings. Item 3, we have safety disclosure. We have go to the part 2. We have the item A, selected financial data. These are numbers, like I told you guys, these numbers. Item 7 is another thing we're talking about. Then and item 7, 7.1A, we have item A numbers, item 9, and we have controls and procedures, item 9, and we also have some item 11, executive compensation, and item 10. So one thing I want to let you guys be aware of is the item 10 and item 11. You can also find more detailed information in the proxy statement. Okay, proxy statement. So proxy statement covers everything about corporate governance, compensation, directors, auditors, anything. But in the annual report, you can also find some summary information about this. So basically, item 10 and item 11, executive compensation and the directors, you can find more detailed information in the item in the proxy statement. Proxy statement is called Form 14A. Form 14A is the official label, but normally people call proxy statement. So you can find more detailed information about executive compensation and directors. And we have security ownership, we have blah blah financial, we have exhibit. You see the exhibit, that's what I'm talking about. You have so many information in exhibit. There's a numerical data there, there's a pictures there, there's a textual data there. It's something you can dig into, and you have summary. So this is the typical structure of a 10K annual report, and we are going to talk about item 1 and item 1A and item 7. Let me give you a very brief introduction of what's each section for. So item 1, the main purpose of item 1 is to introduce the nature of the business of McDonald's. So for example, McDonald's, they will introduce themselves as a franchise, they sell fast food, and that's the main purpose of the item 1, introduce the product, introduce the business description. But at the same time, companies will describe their suppliers, their customers, sometimes competitions, sometimes other stuff. So this is for item 1. The main purpose is business description and the product description. And that's the main purpose. But firms also describe some other things, customers and stuff. That's item 1. So what item 1A? Item 1 is that I mentioned a little bit earlier. Firms disclose risk which will happen. So I'm not saying so that they're talking about two types of risk. Risk already happened, and also risk managers think might happen in the future. So one is called ex post, another called is ex ante. Ex post means something already happened. Ex ante means something might happen in the future. So in the risk sections, firms will talk about the risk already happened. For example, couple of years ago, couple of months ago, there's a hackers hacked the some company's system. So they have to disclose that. I say, oh, we are hacked. There's a cybersecurity risk here. We are hacked, and they disclose the forward-looking. We may be hacked in the future, and blah 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 blah. So for the risk factors, firm will disclose the stuff, the risk that already happened, like something bad things already happened. Also, firms will disclose the forward-looking stuff, like something have not happened yet, but now will happen, but it might happen in the future. So this is the risk disclosure. This is also a very important section for you guys to understand, to do textual analysis. That's item 1A. I want to talk about item 7. It's because for the item 7, the managers can disclose anything they want to do. Okay, they can disclose their performance, they can disclose their R&D, they can disclose their cash flow, they can disclose anything they want to do. Okay, one unique thing about item 7 is there's a rule called safe harbor rule. What does safe harbor rule means is if you say something about the future, you are not going to have a legal liability for something you said which can be wrong. So for example, if manager says in the future, we may have some crisis, blah, blah, blah. But in case there's no crisis happening in the future, the manager will be exempted from the legal suit. So that's some regulation where the regulators want to encourage manager to say something more about the future without being sued, without have legal liability. This is called safe harbor rule. Safe harbor, like when you guys like drive boats, like you guys drive like so there's a harbor there. The boat can roll in and can park there, dock there safely. So safe harbor. So the idea here is, as long as manager are talking about something about the future, even if the statement is not accurate, even if something is wrong in the future, it seems the statement is not accurate, the manager will be exempted from the legal lawsuits, will be exempted from legal liability. That's about item 7 and any forward-looking statements. So basically, managers are encouraged to say something about future information, and the managers will not be responsible for what they say about the future. If it's about future, okay, it has to be about future. If the manager talk about the past and something is not accurate, that's called a lying. Okay, that's called a lying. If you talk about the future, but the future statements is not exactly happen, that's fine. That's safe harbor. So you see the difference, right? If manager talk about the past and it's not accurate, that's not the safe harbor. That's lying. But if manager talk about the future and it's not accurate, that's safe harbor. So encourage managers to disclose more information about the future. So these are the annual report. One thing I want to encourage you guys is, why don't you guys look at some examples of annual report on your own? So I post some pictures here. You guys can get some idea. But you guys doing text analysis, the first thing is you have to understand the data. Before we go into all the machine learning stuff, like I told you guys, always emphasize this. For computer science students, they want to know the algorithm. They want to know the fundamental algorithm. For business students, I want you guys understand the data, understand the business question, and then go to the techniques, go to the algorithm. So data goes first, business question goes first. So why don't you guys look at the data? As a finance and accounting students, if you never see a complete annual report before, I'm just very surprised. Okay, I'm very surprised. So you need to do that. You need to do that. So this is the structure of the 10K. You guys need to do. You guys need to do, and we'll go over some of the sessions. We'll go over item 1, item 1A, and item 7. For rest of sessions, you guys can dig into that. So this is the example of item 1. Okay, item 1. Like I said, item 1. The main purpose of item 1 is describe the McDonald's the product. So let's see that what McDonald's says. McDonald's restaurants offers a substantial uniform menu, although they are geographic variations to suit local consumer preference and taste. In addition, McDonald's tests new products on an ongoing basis. So you can see that all the information is about the burgers. You see the burgers, cheeseburger, Big Mac, quarter pound. Have you guys tried all this? Fillet all fish, chicken sandwich, a chicken McNuggets, wrap, French fries, salad, oatmeal shakes, desserts, sundae, soft serve corns, pies. Yeah, and then they talk about the products. And the restaurants in the U.S., many international marketing offering a full limited market on the sandwich and the biscuit and blah 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 eggs and okay. So by reading this information, you know McDonald's is doing, right? They are selling all meat, salad. They list all the products in a very detailed way. They're very detailed way. They also talk about other information. They talk about R&D. They talk about environmental. They talk about the seasonal options. They talk about other stuff as well. Okay, as well. So how exactly we use this information? I just want to give you guys first. You need to know the data. Okay, know the data first. I'm keep saying that, and then once you know the data, how you are going to use the data. I'm going to tell you several business applications for using this data. The first application I want to tell you guys is you can get the new product of the company. Okay, so for example, so when you look at the cheese, you can look at the chicken McNuggets and the fries. So if you compare this year's products with last year products, if you find something new products there, that means that's new products. That means new products. Does it make sense? So this is very easy way for you textual analysis. Like if your boss tell you, hey, Victor 10, I want you to know what McDonald's has new products in the past 20 years. So you have two options. You either go to find the menu of the McDonald's and check one by one, or you go to the 10K item 1 and you compare the product description with previous product description. If you find something new for here, and then it's new product. So for example, last time when I went to McDonald's, I never see something like let me see. Actually, I tried everything. Yeah. So I never tried. I don't know which I don't try. Wraps. Maybe I didn't see wraps before. Last time okay, let's just see wraps. Okay, like last year they don't have wraps, but this year they have put the wraps on. So by comparing this year's textual product description with previous product description, Victor can easily identify the new product McDonald's generated from the 10K report. So let's just example you guys how to use this data. Like you can do a lot of things. I'm going to talk about like 5-6 examples of using the item 1. But one day you got to figure out on your own, right? When the big four managers and the hedge fund manager ask you to analyze something, you cannot tell you, hey professor, what data I should use, what techniques I should use. I'm giving you all these examples. Eventually you got to figure out on your own about this stuff. So one way to use the products, like I said, you compare this year's product with previous product, you can find the new stuff from McDonald's. Okay, that's one application. How to do the comparison? How to do the textual comparison? That's something that's very fundamental textual analysis. This is also go to my Bilibili website. I give you very detailed information. How do you compare one textual data with another textual data? How do you get the similarity? How do you get difference between the two textual data? Let's also you can go my Bilibili to see the video. We'll briefly talk about later on as well. So this is one application. Okay, another application of using this data is you can measure competition. You can measure competition. So for example, is McDonald's compete with KFC, or McDonald's compete with Olive Garden? You guys know Olive Garden? Olive Garden is more advanced franchise restaurant. So basically the idea here is if you get McDonald's product description and you get the KFC's product description, if you find the two product description are so similar to each other, that means they are competing with each other. If you find the description of one product is different from the other company's product, that means they are not competing with each other. So you can measure the competition between any two firms by looking at their product description similarity. So this is also very is common application for using this product. So you can easily find KFC's product description is very similar to the McDonald's description. If you check KFC's product description, I'm sure they have sandwich, they have chicken sandwich, they have cheese, they have cones, they have ice cream cones. I'm sure they have that. Okay, so because they have that, when you check the similarity between the two products, you can easily tell. You can easily tell McDonald's and the KFC they are competitors. They are competitors. So this is another applications you guys can use, and so I will talk more later on. Okay, I will talk more later on. But I just give you some idea. The purpose of idea here is what does the item 1 looks like. What does the item 1 looks like? And majorly it's about product, but they talk about something else as well, competition, blah, 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 blah. And this is one thing I want you guys to know, the data structure. Another thing is I want you guys to know how to use the information. I'm repeating that again and again. For business students, you have to find the question. You have to find the business question first, and then use some of the techniques. You don't want to You don't, if it's no business question driven, you don't have advantage from computer science students. That's I'm saying that again and again. I will talk more about the product information. Okay, let's look at another example. This is Nike. So Nike, let's see the Nike. Let's see the Nike. Nike. They also first talk about their general businesses, blah blah, and they said. So they said we focus on the Nike brand product, offer 6 key categories: running, basketball, Jordan brand, football, soccer. You guys know soccer, football different, right? So anyway, they put together. So training and sportswear, and we also market products designed for kids. So this is the keys as well, and the ethics and creational users, and blah blah blah, and tennis. You see, they got golf, tennis, and volleyball, walking, blah blah blah. They target, this is their product line, and also they also target athletes, professional athletes, and above the you can see above the mentioned categories, which features in the same trademarks are sold predominantly through the same marketing distribution channels as athletic footwear, and then they sell shoes as well. So they also have some like a performance equipment. For example, they have bags, they have socks, they have sports balls, they have eyewear, they have timepieces, watches, they have digital device, they have bats. You know bats? You guys play baseball? They have gloves, blah blah blah. There are many stuff. So this is the products description for Nike. So for Nike, so you can get the like same applications. If you want to see if Nike run into a new business or not, you compare the Nike's today's products description with the previous description, you can easily tell whether they have a new product this year, right? Instead of doing some manual work, you can do textual analysis. And at the same time, you can easily tell Nike's competitors. If you guys get Under Armour, I don't know if you guys know Under Armour. If you pull out Under Armour products description, you will see great similarity between Under Armour's description with Nike's description. So you need to know how this data can be used for business students. Okay, for business students. So this is let's keep going. Okay, let's keep moving. And so what's the application? What's the application here? And so they will measure similarity. Did I say measure similarity? I think we said that, right? We said measure similarity. Let me add the measure new products. Okay, new products this year. I think that's a good example to put on too. So okay, so you can measure the similarity. You can measure any firm, for any firm, which firms has similar products with the firm. You can measure that by looking at the similarity between the product description of the two firms. You can measure the new products. How do you measure new products? You look at the Nike's this year's product with previous product description. You find something new, that is as a new product. You can measure competition. So how do you measure competition? So think about it. Think about it. If this year I only have 2 people have similar product with me, but next year I have 10 people have similar product with me, does that mean my competition rises? Does that mean my competition with other product rises? Does it make sense to you guys? Because you can get the similarity, right? So this last year, my product is only similar to 2 firms. But this year, my product is similar to 10 firms. These 10 firms' products are similar to me to this year. So from last year to this year, my competition rises because more people are producing the products similar to my product. That scares me, right? That scares me. So that's something you can use that to measure the competition as well. So in the merger acquisition, we can use that as well. So for example, if one company A want to merge company B, you can measure their product similarity and complementary, right? If their projects are too similar to each other, maybe there's no merger acquisition synergy. But if the two products are kind of complementary to each other, maybe there's more synergy. So this kind of stuff can be used at the merger acquisition analysis as well. So it's like we have a Victor and a Sumin. If both Victor and Sumin they know Python very well, we put them on the same team. Maybe there's no synergy. But if Sumin know Python, Victor know algorithm, know the data well, if we put them to the same group, then they will have a synergy. Same thing here. You can calculate the firm's product similarity and the complementary using the way I calculated. If the when two firms merge together, when the product too similar to each other, do they have synergy or not? I'm not sure. But if the two firms' products are complementary to each other, do they have synergy or not? Maybe not. This is something your boss, your hedge fund manager wants you to test. They will say, hey, Victor. I always use Victor's name and to change it with some other name. Duan Zijun or Luo Zhuo. Hey, Luo Zhuo, I want you to. So Luo Zhuo, your boss may give you a task. I want you to tell if I acquired firm A, would you give me higher return or lower return? The boss's question will like that. Okay. Then Luo Zhuo will just touch his head and think about how should we do that. How should we do that? And one way you can do is you get the product similarity between your firm and the candidate firm, and you can see the product similarity. And once you have product similarity, and you can see that would that similarity help the synergy or damage the synergy, that's something you can test. That's something you can test. This is just one example I want to give you guys how to use 10K. It's a very powerful item one. So we talk about the product similarity, we talk about the new products, and we talk about competition, we talk about the merger acquisition synergy. Let's talk about the industry definitions. So this is very interesting stuff, So let's take an example of the Amazon. So would you consider Amazon is a retail firm selling stuff to the consumers, or you consider Amazon is actually e-commerce company, like a platform company? So how to define Amazon, the industry of Amazon? Traditionally, you guys think Amazon will be similar to just like a retail platform, sell stuff to people. But if you look at Amazon business, retail business, the selling business on Amazon, it's just now just part of it. The big portion of Amazon doing right now is cloud computing. So they provide the cloud service to firms. They provide machine learning service, data service for people. They provide computing resource for firms. So how exactly define Amazon's industry? Should we consider Amazon as a retail industry or as a high-tech industry? So it's very difficult for us to define the firm's industry right now, because every firm is doing something differently, like different segments. So let's also talk at Tesla. Is Tesla really in the automobile industry? Or Tesla is more in the electronic industry? Because most of assets for Tesla, actually, they are patents. They are patents of batteries. They are patents of producing the solar panels. These are the assets of Tesla. So right now, it's very difficult to define a firm's industry because each firm are doing different stuff. So let's take a look at a company of Chinese company, Meituan, right? You guys definitely use the Meituan. So we have a debate on Meituan, how to define Meituan company. Would you consider Meituan is a delivering company, like delivering fast food delivering company, or you consider Meituan as a logistic company? So that's a different concept, because if it's just food delivery, it's related to food. If it's a logistic company, Meituan not just deliver food, they will deliver books, they will deliver everything, they will deliver waters, everything, computers. So how exactly define these firms is very difficult, because firms are branched out to different segments and different business. So the traditional way of defining industry is very difficult, but with the textual analysis, we can define firms at a product level. For example, you look at the McDonald's. You look at the Nike's case. Nike talking about they sell shoes, they sell clothes. So at a product level, we know Nike can do that. Also, we know Nike also sell timepieces, the watches. So by looking at the firm's specific product, we can define the firm's industry at the product level, which is more refined way to just assign Amazon to retail industry or assign Amazon to high-tech industry. So the textual analysis here for the product description, not just helping us to get the similarity, also help us to define firm's industry. We can define firm's industry at the product level, like which product the firms are actually doing right now. It's much more refined way. So for Amazon, if you check Amazon's data product description, you will say they have the online platform. You have say the AWS. You have they have other services as well. So you look at all the product Amazon was talking about. So you can define Amazon which industry they are in based on the product they are producing, based on the service they are providing. So these are the applications of item 1. Powerful. I just want to say powerful. And this is just a very tiny examples. I want you guys to know. There's other huge applications of using this. One project you guys have to do is you have to look at all the data I discussed for today, and you come up with new applications. By the end of the semester, I want to hear your idea. You are not just follow me. I just tell you the data can be used like this, data like that. I want you guys to be a thinker. I want you guys to think about this. After I give you all examples, can you come up some new applications I didn't talk about in the class? Yeah, I want you guys to think about it. Keep thinking about that. Okay, by the end of the semester, I want you guys to come up some ideas. How to use item 1, how to use item 1A, how to use AK, how to use conference call. Come up with some ideas that you can use the data to resolve some business problems. You guys see what I talk about here? I use the data to measure product similarity. I help business because I can tell which products are similar to each other. I can measure new products. I help business because I can identify new products by using the data. Can you come up something like this using your imagination, using your creativity, and I want to hear your ideas. Okay, there's no good idea, bad idea. I just want to provoke you guys to think, not just follow my examples. Think about new stuff, okay? Think about new stuff. Be a thinker, not a follower. That's the message I want to send out. Okay, so this is item 1. Let's keep moving. Let's move into the item 1A. That's 1A. So yeah, so think about new applications about this. Let's look about item 1A. So item 1A, let's look at the risk factors. Like I said, the risk factors will disclose the risk events already happened or the risk events manager believe will happen in the future. So both the ex post and ex ante. So you look at the case here. I forgot which company is this. Maybe Nike, maybe McDonald's, maybe I forgot. Anyway, it doesn't matter. So here, what we see here is you see the risk they're saying. We face intense competition. If we do not continue to innovate and provide products and services that are useful to users, we may not retain competitive and our revenue and operating results could be adversely affected. Okay, so blah, 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 into why they explain why is that and blah. This is a risk. This is called operational risk, okay? Or call it operational risk. Let's look at the second one. Our ongoing investment in new business, new product, service in it's risky, and we could disrupt our ongoing business. So this is also operational risk. So you can divide the risk in different types. You can divide. There's a distribution risk. There's operational risk. There's a product risk. There's a blah blah blah. There's a lot of risk disclosed in a risk factors, and you can categorize them. That's one way. That's one way you can do that. That's one way you can do. Let's look at more examples. Let me see. Okay, so more people are using device than desktop computers to access the internet and access new device to make search inquiries. If manufacturers and users do not widely adopt versions of our search technology products or operating system developed for this device, our business will be adversely affected. So I think this is Google. Okay, this is Google. I think I just record. This is Google. So you see the Google describe all these risk, and let's look at some other things. That we generate a significant portion of our revenue from the advising, and reduced spending by advertisers, and loss of partners could seriously harm our business. Okay, so these are all operational risk, okay, product risk. So Google kind of wants investors to know what happened ahead, right? They want to tell people something may be wrong. Be careful, be careful. This is after 2006. After 2006, firms are mandated to disclose this. Before 2006 is a voluntary disclosure. 2006, managers can talk about it. That's fine. They don't want to talk about it. There's no problem. It's optional. After 2006, the SEC mandate the disclosure of the risk. Manager have to talk about the risk in their item 1A. So let's look at more examples of that. Let's look at more examples of that. Let's keep moving. Still moving. Okay. So we are subject to increased regulators' scrutiny and may negatively impact our business. We are regularly subject to claims, suits, lawsuits, government investigations. Acquisition could result in operating difficulties, dilutions, and other consequences that may adversely impact our business and the results of operations. So these are different risks now. The first risk is about government risk, regulatory risk, right? It's different from the operational risk we're talking about. So there's a monopoly, right? You look at, do you guys heard like Google was like they were sued by Europe commissions because they think Google kind of have a monopoly power. So this is regulatory risk. This is another type of risk they disclose in the item 1A. So the second one is a legal risk. They may be subject to lawsuits, claim. So these are legal risk. So that what I'm trying to say here is that the risk disclosure contains all kinds of risk: operational risk, product risk, regulatory risk, and the legal risk. Many things. Manager need to just be transparent with investors about what kind of risk, and then you can do the text analysis to extract all type of risk, right? You can do text analysis to do that. So this is the nature of the data. So we face intense competition. I think that this is if you do not anticipate the evolving consumer preference, this is a new risk. Unfavorable general economic conditions will affect our business. So this is about microeconomic risk, right? It's a microeconomic risk. So there's many supply chain risk. You see, supply chain interruption may increase cost to reduce revenue. It's a supply chain risk as well. So what you can do with this data? First thing you can do the data is, once you know the risk, can you predict the future outcome? If companies say they have the supply chain risk, can you actually use that to predict the company is going to do something bad about supply chain? If the company is saying they have the legal lawsuits, can you use that to predict the company have legal lawsuits? So my point is, once you have the manager's discussion about future risk, you can do the text analysis to use this discussion to predict what will happen in the future. In the future, it may happen, it may not happen, but using a large sample, you can get the likelihood of what it will happen in the future. That's what you can use. That's what you can use. For example, they talk about the legal risk. They talk about the supply chain risk. They talk about the competition risk. They talk about a lot of risk. It's not about Google, right? Everybody talk about Amazon, talking about it, and Uber talk about it. Everybody talk about it. If you put all the sample together in a larger sample, can you use this discussion to predict what will happen in the future? Can you do that? That's what we are doing now. You can tell investor, let's say Shirley is investor. I tell Shirley, hey Shirley, after tax analysis, I have to tell you, Google is going down. Don't do Google. You have to get out. Shirley. So that's what tax analysis can do. You understand these risk factors, and you use a larger sample. You pull Google, Amazon, Uber, all the firms together. When you analyze the large sample, you can tell investors what will happen in the future. At least the likelihood what will happen in the future, and you help investors to make investment decisions. This is one way we can use the risk disclosure factors and predict the future risk outcome. And another important application is bank risk. What do I mean by bank risk? Bank always disclose their risk, right? Bank also disclose, I have a cash flow risk, I have a real estate risk, I have a loan cannot be paid, and blah blah bank. So why we want to focus on bank? The bank is very important in our economy. If bank goes down, everybody goes down. Does it make sense to you? So this is very important. So if one manufacturing company go down, we are fine. It's fine. But if bank goes down, a lot of people will go down. This is a harbor in our economic, financial harbor in our economy. So we cannot afford the bank risk. So that's why when bank disclose, they have a cash risk, they have a real estate risk. We have to analyze bank risk in a very careful way. We have to see if bank will experience some future negative events. If that's the case, you have to be ready. Both of us. Like I said, bank goes down, everybody goes down. So we have to look at the bank risk disclosure very carefully to monitor the bank, to see the bank they are doing okay. Can they issue more loans? Do they have enough deposit? You have to look at the bank deposit, the risk disclosure very careful way to get the things done. So I want to give you guys some references. So you can see the RFS. I think 19. So these are the some references you can do to use. So these are the some reading material. You don't have to read it. I basically explained everything already. But for those of you who have advanced knowledge, you want to know more. You can read more about this. How to use the annual report item 1A to measure bank risk. Once you know the bank risk ahead of the time, you can predict what happened in the bank, and you can help the whole economy, right? You can help the whole economy. This is what item 1A. This is item 1A. Let's keep moving to the other item. So this is item 7. Item 7, they can discuss everything in item 7. So item 7 is designed for managers to talk about anything about them. They can even talk about their life, but nobody talk about their life in item 7. But I just want to give you a metaphor. This is a free talking space. They can talk about anything about the firm, most of the forward-looking stuff. So let's look at what they talk about here. They talk about the strategical directions, financial performance, and the company's blah 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 financial performance. This is discuss financial performance. Let's look at the second one. They talk at outlook. This is forward looking. They want to talk about the future. In the future, what will happen? Do you remember, like I told you guys, when they talk about the future, what's the rule I'm talking about? Safe harbor rule. Okay, when I talk about the future, there's nothing wrong about them. Even if what they said is not accurate, there will not be penalty. There will be non-legal issue. This is safe harbor rule. But if you talk about past, it is inaccurate. That's lying. Okay, that is lying. There's a difference between that. So you can see they talk about the future. What happened in the future firm. So let's see. This is another company. They talk about the trends in our business. It's all about future, right? Users' behavior, the advising continue to shift online. blah blah blah. This is they talk about the future. They talk about the trend. This is another things about in the item 7 is they talk about segments. They talk about segments. So what does that mean? So so uh, so Amazon has different segments. Amazon has the online retail, has the AWS, and blah blah. So this section tell you just describe each segment in a detailed way. So in online business, how much money they own. In AWS, how much money they own. So in this section, they break down the segments. So another example is for example, Nike. Nike, how much money they earn from the shoes and the clothes, how much money they earn from equipment, how much money they own. So this kind of breakdown of their product line and segments to give you more detailed information of that. So on Wednesday we have an example of using this information. I'm not talking about too much on this how to use the data, but once you know the detailed information of how much money each product can produce, the firm can do a lot of good stuff. Like if your manager, like let's give an example again. So Victor, if your future boss told you, hey Victor, if you can know how much money each product line can produce, can you use that information to help investors, help managers? So this is the information you have. You have the revenue from the shoes, you have revenue from the equipment, you have revenue from the watches. So you have the decomposed revenue from each product line and the segments. How do you use that information to help firms, to help investors, to help managers? We'll talk about that examples. Okay, talk about examples in next section. Next section we'll talk about how to use the breakdown product revenue to help investors and managers. So they also talk about a lot of stuff: goodwill, long-lived assets, impairment. These are very accounting. Goodwill, I don't want to talk about goodwill too much. You guys understand long-lived assets, impairments. So these are the item 7. So what do you do? What do you do? Use item 7. Item 7 has a great use for a lot of stuff. Okay, has a great use for a lot of stuff. So for example, the item 7 talk about a lot of future. You can use the future. You can talk about the discussion about the future to predict the future. Does it make sense? Earlier example, they talk about in the future, they will have a outlook or have sales revenue, blah blah blah. They said in the future they're going to switch to online platform. So because the manager is talking about the future, you can use that textual information to predict the future by combining all the samples together. That's one more important way to use the data. Okay, if they talk about the future operation, you can use that to predict the future operation. If they talk about the future customers, you can use that to predict the future customers. So since the managers are talking about the future, you can use the textual information to predict the corresponding future outcome. That's one important way how to use item 7. If they talk about past, maybe you can use that too, because they talk about the past and talk about the future. You can combine the past information and the future information they talk about and do the textual analysis and predict the future outcome. So you can, by predicting that, you help managers, you help investors, you help a lot of people. That's one big applications you can use item 7. So what other applications you use? These are the two important, very interesting item you can see. Another way people use is you can compare. So you can compare these years. You can compare these years. So there's two new stuff you can test. One is lazy manager. Another one is lazy investors. So what does lazy manager mean? Lazy manager means you can find like sometimes this year's item 7 is almost exactly the same to the last year's item 7. So when you find this year's item 7 discussion is same to the last year's item 7, what does that mean? That means the CEO is the manager is lazy. They just file something boilerplates. They just keep talking about things in the past. So these are the lazy managers. So you can tell if they are this year's item 7 is too similar to previous year's item 7, that means the manager is lazy. So what does that mean to manager, to investors? That means can you really trust the firm? If manager are lazy like that, if they are copy paste past year's discussion to this year, do you think they can do a really good job in operating the firm? That's what we found. They are not. They are not. If the managers actually copy paste the previous discussion to this year, that means the manager is lazy not just in this way. They are lazy in many ways. So we found the firm's future performance not good. A lot of things are wrong with the firm. We don't want to invest in that kind of firms. Okay, that's one thing we actually find from large data analytics. Does it make sense? Does it make sense? If you find someone, so let's say you give me the project 1 and give project 2. If you copy paste your project 1 code to the project 2 and give to me, do you think I will really trust your work and think you're a good student? Probably not, right? Same thing to the manager. If manager the discussion is too similar to the previous one about the future, that doesn't make sense. Future are changing. Right, future are changing. So by testing whether they are lazy manager, we can see the firm will do well in the future or not. It provides implications for investors. If the manager are doing a lazy job in discussing the item 7, that means the firm is doing something wrong. Either they are lazy or they want to hide the information. So anyway, it's wrong. Okay, so if their discussion is too similar to previous year, maybe they are lazy. Maybe they want to hide information. Maybe they want to hide some negative events. There's something wrong about the firm. So we have to inform investors. You have to be careful. You have to be careful about this firm. That's the testing of lazy managers. We can also test lazy investors. What does that mean? That doesn't means that means sometimes if you look at one company's discussion with previous companies previous year, there are some paragraphs are similar. There are some paragraphs are different. So what we found is sometimes investment are lazy too. What does that mean? Means investors, they do not really do a good job to see what are the good new contents in the new discussion. So let's say if the manager this year they have 10 paragraphs. Out of 10 paragraphs, there's a 6 paragraph similar to the previous year, but there's a 4 paragraph not similar to previous year. What we found is investors are too lazy to find what's the new information there. That's what we that's the literature found. So basically, investors are lazy too. They kind of do not carefully compare this year's 10 paragraph with previous year. They kind of too lazy to identify what are the 4 new paragraphs disclosed in this year. So this is the problem for the investor too. But you understand, we are human being, right? We are human being. So we have limited time to understand all the textual analysis. So things are changing when we have machine drive trading. So right now, this when the time changes, we have more machine reads the report, and the machine can automatically identify the difference between the past paragraph and the new paragraph. Machine can immediately trade on the new information. So what I'm trying to say is, in the past years, when human read them, either human are too lazy or human has limited time and the cognitive constraints to process the new information compared to the last year. But nowadays we have so many machine traders, we have machine readers. The problem is less salient right now because the machine can easily tell out of this year's 10 paragraph how many paragraph is new relatively to previous year. So this is the something important that you can see on the textual analysis part. So to summarize, what you can do with the item 7, the first one is to measure the forward-looking information and use that forward-looking information to predict future, and you can help investors make investment decision, and managers help you make decisions. That's the first. And the second, you can test if managers either are lazy or not want to disclose information, but compare this year's discussion with previous year. If they're too similar, something is wrong about firm. The later thing is you can also see, can human investors actually really tell the new content from this year compared to next year? Because of human investors, they have limited cognitive capacity. So human investors may miss a lot of information by compare the catch on information of this year with next year. But with the rising of the machine, the problem becomes less salient. This is something you guys will discuss later on. So these are the three implications using the item 7. I want to emphasize again, I don't want you guys just memorize this. I want you guys to think about new stuff. How can you use this data to do something new, to resolve more new business problem? So how about you guys read the annual report first? Read the annual report, and to read some actual example, and start to think about what kind of new question, new business problem you can solve by using the data we discussed today. The example I give you guys just give you guys as an appetizer, you guys to provoke you guys to think. I think you guys need to think about in a new way. Can you use the data to do something else, to help your parents, right? Do your parents invest? Maybe, right? Why don't you, after you take this class, you pull out this data, do some textual analysis, and tell your parents, hey, mom, we should do this. We should do this, right? Think about it. Think about it. This is a project I want you guys to be done by the end of the summer.